The pace of change in corporate tax is accelerating, and the pressure is building. From global minimum tax rules to the corporate AMT, tax departments are facing a wave of new complexity and disclosure demands. Adding to this, ASU 2023-09 introduces heightened expectations for how companies calculate, explain, and present their tax position and financial statements. The effective tax rate reconciliation is central to the changes introduced by ASU 2023-09. Public companies with annual periods beginning after December 15, 2024, must comply to the updated standard. Private companies have an additional year to comply. For both private and public organizations, ASU 2023-09 requires them to break down their rate reconciliation in both percentages and dollars.
Under the new guidance, each item must be classified into one of 8 standardized categories, including foreign tax effects, valuation allowance, tax credits, and so on. All of this isn't just about updating a table, though. It's a significant step towards greater transparency. Reconciliation summaries will now be a detailed list which could span 10 or more rows in the 10K. Those summaries will clearly break down the key drivers of your effective tax rate for auditors, analysts, and investors alike.
While ASU 2023-09 doesn't require companies to apply new structure to prior periods, many organizations will find it beneficial to do so. Aligning historical data with new categories can help establish reporting continuity, support more meaningful trend analysis, and build a stronger foundation for year-over-year comparisons, especially as stakeholder expectations evolve.
That's where Bloomberg Tax comes in. The process begins in Bloomberg Tax provision, where tax data is centralized and structured with heightened granularity across federal, international, and state inputs. The platform's robust state setup enables precise multi-state calculations, whether you're using blended rates or drilling into state-by-state details. Even though the ASU 2023-09 allows for blended state disclosures, many companies will need to run detailed state calculations to support their underlying numbers, respond to audit inquiries, or meet stakeholder expectations. Bloomberg Tax helps make that complexity manageable because Bloomberg Tax provision is integrated with our research product. All tax rates and policy changes are automatically updated. This eliminates the need for manual research and reduces the risk associated with outdated or incorrect information.
Next, Bloomberg Tax Workpapers helps you solve one of the most time-consuming challenges in tax, transforming raw, inconsistent data into reliable, audit-ready outputs. In most tax departments, raw data arrives in formats that aren't readily usable. Getting it to shape typically means hours of manual cleanup in Excel, which can introduce risk and create inefficiencies. But with Bloomberg Tax Workpapers, you can start by uploading raw source data such as trial balances or fixed assets data and use standardized templates to cleanse, structure, and map that data into the right format for your calculations. For more complex cases, you can customize your workflow by using blocks, which allow you to automate and tailor to your specific needs. Once processed, the data can be linked directly into a supercharged spreadsheet-like environment where your team can make the final adjustments, track changes, and maintain a complete audit trail. One area where this workflow really shines is finalizing the book-to-tax summary. Whether you use one of our templates or your own structure, Workpapers lets you link calculations across the workbook and automatically send it to provision, which saves you time and improves consistency across your workflows.
ASU 2023-09 establishes a clear framework, requiring greater detail, enhanced transparency, and more pressure on tax teams to deliver structured, auditable disclosures. This isn't an isolated change. Rather, it's part of a broader regulatory pattern toward granular reporting. To keep pace, you need more than spreadsheets. You need a system that breaks tax data out into greater detail, automates the most complex calculations, and connects your entire workflow from provision to footnote.